welcome to the LA Venture Podcast. This is Minnie Ingersoll, host of the podcast and partner at TenOneTen. TenOneTen is a seed stage fund here in LA. All opinions expressed on this show by me and my guests are solely our own. Today's episode of LA Venture is sponsored by SaaSoft, offering customized software development for your startup's needs. SaaSoft is a group of top software developers, all based here in Los Angeles. If you are looking to build a new product from scratch, or if you're a founder that needs help accelerating product development, SaaSoft can help. Head to SaaSoft.com for a free consultation. I am thrilled to have Aaron Fyke on the podcast today. Aaron is the founder and managing partner of Finline Capital, a seed fund focused on energy and sustainability. Prior to starting Finline, Aaron was the founder of 6 companies in the areas of fuel cell, ocean power, concentrating solar, and energy storage. I am pretty sure that Aaron is going to convince me to become a cleantech investor. Aaron, thanks for coming on the show.
Hey, great to be here.
Great. Yeah, why don't we just start with the premise of Finline and why you can be a seed stage investor and still move the needle here?
No, that's exactly it. So people remember, some people remember that 10 years ago, there was a lot of excitement about what was called clean tech, and then fundamentally a lot of disappointment. I mean, Tesla was a big success, but a lot of the companies required an enormous amount of capital, to build out a big solar tower in the desert or some biofuels plant, or these are very capital intensive investments, and they took a long time to exit. And so then everything kind of fell apart in 2009 with the global financial crisis. And that was around the time, by the way, that I started connecting with Idealab and decided to start multiple companies in that environment. But what I noticed, the reason those investments from 10 years ago were so difficult is that everyone was trying to build out these markets. They're trying to build out the solar market or build out the battery storage market or electric vehicles. They couldn't be a piece of the supply chain. And with traditional venture capital investing, this is a good thing, right? I mean, like Google basically built out internet search. They didn't sell into the internet search market, and Facebook didn't sell into the social media market. So VC investors were lured into the illusion that starting a whole new industry is just what's done. And yet in the energy space and the industrial space, you don't do that. You don't try to build out whole new industries using venture capital dollars. And they didn't. And what happened is wind took off, solar took off, but they all took off with corporate balance sheets, with debt financing, any other vehicle than venture capital dollars, as it should have. And so what I notice now when I was wanting to get Finline going is that the solar industry, the electric vehicle industry, the grid scale battery storage industry, wind, all of these things were big enough industries on their own that now a bunch of traditional venture capital type companies could now sell into those markets. It's very different selling into a massive market than it is to try to build it out from scratch. And so all of these new companies were far less capital intensive. And so, there was a dot-com crash and then a recovery. There was a clean tech crash. It was too early. By the way, I'd argue the dot-com crash happened because it was too early. There weren't actually that many people on the internet, whereas in Web 2.0 is when that surge happened. Now these markets were mature enough to accept startups selling into them. And that's the Finline thesis, to invest in these low capex companies that are hitching their wagon to the growth of solar or wind or storage or these others in industries.
So tell me more about the status of renewables today, or just the state of the industry.
Yeah, well, so to give you an example, I mean, 10 years ago, globally, there were 7 gigawatts of solar installed. And now there's well over 500. And then wind is the same thing, it's over 500. So there's a terawatt, there's a trillion watts of capacity installed in renewables. And it's an exponential growth curve. Renewables are now flat out cheaper than traditional fossil generation. The coal industry is in sharp decline because it doesn't really make sense to build a no coal plant. You can buy a wind farm or a solar field for far cheaper. And the same thing is true of electric vehicles. The expectation is that electric vehicles will reach cost parity with internal combustion engines literally in the next 3 years.
Let me just stay with those industry stats, because I think some of that is really striking. It's cheaper for, I think you said like a utility. Would it be a utility as the customer here who's buying? And so it's cheaper for them to go to a wind farm than a coal plant right now.
Yes. Well, so there's a little bit of industry dynamics. Typically what happens is There are independent power producers which actually own the plant, and then they sell the electricity to the utility. In many regions, the utilities are forbidden from actually owning the plants themselves, just some monopoly regulatory law. But the people who ultimately develop these projects, you're going to build a new installation. Yeah, it's far cheaper to go after solar or wind than to build a coal plant.
Does that totally disrupt things, though, because the people with the expertise building coal plants are different than the people with expertise building solar power?
Well, so let me say one thing before someone says, well, that's not quite a fair comparison. And that is coal plants have what is called firmed power, which is that they produce 24/7 at a constant rate. And people think that it's called baseload power. And people think, well, you need baseload power. And renewables can't provide that. That's the biggest criticism of renewables. While the sun is not shining or the wind is not blowing, you won't have renewables. A couple of things have happened regarding that. The first off is that you don't actually want baseload power. You want power that ramps up and down to match demand. And it's an illusion to say you want baseload power. In fact, what I find really hilarious is people criticize renewables saying, well, in order to work, we're going to need to build out all this storage. And no one thinks of the fact that, so one of the biggest storage installations in California is the Helms pumped hydro facility north of Bakersfield. It's 1.2 gigawatts. It was built in the 1960s. It was built because Diablo Canyon nuclear facility was being built, meaning in order to subsidize nuclear power, we needed storage. Why is that? Because you can't shut a nuke plant off. And so they have negative electricity prices in Texas right now because they have so much wind and the nuclear reactors at night can't shut off. And so therefore it's driving the electricity price to negative. So I just want to point out that renewables do need storage, but by the way, so did coal and nuclear for the opposite reason. And storage is getting far cheaper now than it was. So that's the first piece. So before someone says, yeah, but solar, what do you do at night? And the answer is you store it. But now to your point, yeah, General Electric flat out said, GE is, by the way, a massive provider of steam turbines for the coal industry. GE has announced that we are out of the coal plant business. Coal use has declined something like 60% in the US, in the last 10 years. It's just, yeah, we're not building new facilities, but that's okay. One of the fastest growing positions is wind farm maintenance technician. And that's just going to be the growth jobs of the future.
So, I mean, that almost sounds positive, right? And yet we're having all this massive global warming. We're in the middle of some crazy storm right now. Do you want to give me the less sunny side of what's going on?
Well, I mean, the storm is entirely due to global warming is average temperatures are increasing, but that is driving huge amounts of variance in the weather. Amory Lovins thought a better term would be global weirding, because areas that are dry are going to get drier. Areas that are wet are going to get wetter. We're going to have way stronger snowstorms, way stronger heat waves. We're going to have to learn to live with this. I mean, if we want to stay below 1.5 degrees C, we're down to 7 years of carbon budget left before we blow that, which means we're at 1.4 now, or at least 1.4 is what's locked in. I want to be optimistic that we will stay below 1.5, but
can you also explain that 1.5 and what happens there and sort of what that theory is?
Yeah. So we currently are 0.9 degrees Celsius hotter on average than the long-term average has been. So you take the long-term baseline of what the temperature should be, and our average now is 0.9 degrees hotter. And that temperature delta has caused the increase in wildfires in California, the flooding in Florida, all this stuff. So that's 0.9. The trouble is, if we shut off all emissions today, dropped it all to zero, then the stuff we've already emitted, which hasn't yet got to the upper atmosphere, that is going to drive us to 1.4. So we basically have 1.4 locked in like right now, even though the average temperature is actually 0.9. So if we went to zero tomorrow, we would still drift up to 1.4. There's these things called carbon budgets. It basically says, if we continue to burn or release CO2 and other greenhouse gases at the rate we're releasing them, then if we keep doing that then 10 years from now, we will use up the amount we can use before locking in 1.5 degrees. And then, of course, we've continued to do that for 3 years. So we have 7 years left. And so that's what that carbon budget means. It means how much CO2 we're allowed to emit and what will be the resulting temperature change, which comes from that.
And don't things start to happen once we hit 1.5? Like the negative cycle starts even more than it already has?
So the big risk are these irreversible feedback loops. So a good example are wildfires. So as fires burn, we release CO2. As we release CO2, fires burn. So that's a feedback loop. Another good one is the Arctic ice melting. The Arctic ice reflects a lot of solar radiation because it's big and white and shiny and large. And as that ice melts, that mirror, so to speak, well, goes away because it melted. And therefore, we're reflecting less heat away from the Earth. Therefore, the Earth is heating up warmer. So we heat up, we melt ice, we heat up faster. So there's a number of feedback loops, permafrost melting in the Arctic. Okay, so if we trigger these feedback loops, which ultimately release more greenhouse gases than we as a society do, then what that means is that's it. It's game over. Because if we could reduce to zero, it doesn't matter anymore because we're now off the cliff. And what's driving global warming are these feedback loops. So the majority of these feedback loops trigger, I mean, there's no line in the sand, but 2 degrees Celsius is a point at which there's real risk that a bunch of these will be triggered. Somewhere between 1.5 and 2 degrees Celsius, we're not triggering these feedback loops as much, but billions of dollars were lost because of Hurricane Harvey. I always think, like, let's just budget the next hurricane. Okay, we're going to lose X number of billions of dollars. Can we just pretend we've lost it now and take that money and investing to move away from carbon sources? Yeah. Or we just sit back and blow it all in lost real estate, like your choice. So there is no line in the sand for 1.5 degrees. It's just that 1.5 is a reasonable target because it's in the near term. And anything after 1.5 and 2, things continually to get worse and worse and worse. But if we go past 2, there is a serious risk that it's game over. And so you don't want to set your goal to be the end of society.
Yeah, although you scared me even before getting to the 2-degree bump. You scared me in your Innovate Pasadena talk. Just where we are today is already pretty terrifying.
Yeah. Well, people don't realize, like California, for example, the biggest fire ever to happen in California's history has happened in 2017, 2018, and then multiple times in 2020, right? So this is a huge drain on California's economy. So that's just California. Same thing is happening in the East Coast for hurricanes. So the situation we're in now is worse than it has ever been in basically all of recorded history, and it's only going to keep getting worse.
I think Mike Pence I think he said the opposite, Aaron.
I mean, what's hilarious is there is a federal report on climate change, and the FDA, NASA, the Department of Defense, the EPA, like it's all these federal agencies, they all agree that this is a serious issue, except for the White House and the Senate. Those are the only two. They didn't agree, but everyone else did. And of course, that's no longer true with the change in the election. If we got to build a lot of wind farms and a lot of solar panels, that's a lot of non-outsourced jobs. I mean, you can't outsource driving the crane to put up the wind turbine to a call center in China, or I guess it would be India. China's not known for their call centers. But the point is, Biden's looking at this like, okay, I need a massive jobs program, sort of equivalent to post-World War II development. And I'm going to use the stimulus that we need and line that up with what we need to do to meet the necessities of climate change. So he's pledging like $3 trillion of investment to boost US manufacturing capability because of this. And that is a really huge deal because people make money, like VCs make money when things change. I mean, the internet was the biggest change ever for the telcos. But before the internet came along, you got charged long distance to make a phone call. Heck, when I moved to LA, I had to pay long distance to call across LA. And then the internet came along and blew all that up. And so when things stay the same, nobody makes money except the people who are in that position to just keep cashing checks. And so the right way to look at climate change is this is literally the biggest national security threat we have, but it's also the biggest economic opportunity that has ever happened. And so there's a reason Amazon has $1 billion fund and Breakthrough Ventures has announced another $1 billion fund. I mean, people with a lot of money are realizing that this is what the opportunity is ahead of us. So I try to look at it that way. I don't try to look at the gloom and doom because I think inspiration motivates more than fear, even though fear is pretty scary.
So what are let's take the inspiration. Where do you think the real opportunity is, at least from Thinline's perspective?
So there are really big opportunities that Breakthrough Energy Ventures, Amazon and, DBL, these larger funds are looking at.
And Breakthrough is Bill Gates?
Breakthrough it's Bill Gates and a variety of other people that he has brought in. And I don't know if Jeff Bezos said, well, I'm doing one of those too, because Amazon now has one. Seattle's not a big place and the Billionaire Club is never very big. I'm sure Bill and Jeff know each other. But anyway, there is a lot of opportunity to invest that kind of money. However, there's a lot of opportunity to invest in companies that don't require $20 million or $50 million to deploy it. And that's what I focus on. Software companies, or what I call CapEx light hardware. So printed circuit board assembly, some sensors, some analytics. And that's the stuff I'm participating in. So I have a company that is, so electric vehicles use a lot of batteries. And if you're a car company, or any manufacturer, there's incoming quality control. You test the batteries you get in, you track all this stuff. And historically, that's basically been done with Excel sheets, because if you buy a battery testing machine and test a bunch of batteries, you can probably track it on an Excel sheet, because who buys 1 million batteries? Well, now a lot of people buy 1 million batteries. And so, this is a cloud-based solution now, which allows a provider of batteries, a purchaser of batteries, anyone to track the battery performance through the supply chain, track batches against other batches. But fundamentally, it's a big data play with a cloud-based solution and analytics, which if I didn't say batteries, if I just said, oh, this is a big data cloud-based analytics company, any VC would say, well, that's in our thesis. I mean, that's the kind of thing we're talking about, except in this particular case, we're talking about it not for booking hotel rooms, but for tracking the huge ramp that's happening now in the battery supply chain.
I would guess, and knowing your background a little bit, I would guess that storage is a big area that you spend a lot of time looking at.
Yeah, I started or co-founded 2 energy storage, well, I guess 3, depending on how you look at it, companies out of Idealab, or with Bill Gross at Idealab. And so I spent a lot of time looking at the grid scale storage market. One of the companies, I met this company in 2014. They basically are building out Google Maps for the grid. And so they're not a storage company, but they can identify, oh, if electric vehicle penetration is here and rooftop solar is here, then these are the locations on the grid that storage is most valuable. So instead of investing in the gold mine, I'll invest in the map to the gold mine. That fits my thesis. So I'm very interested in storage, but I'm interested in the companies that will help make storage work, because, first there was wind, then solar. Now grid scale storage is the next wave that's going to see huge growth.
Are utilities the customer for that?
So for this particular company, yeah, the utilities are the customer. It takes a while. They have to go through various layers of approvals. On the other hand, once you have sold to utility, and in particular, when you have proven to utility that you're valuable, and then other utilities just say, look, who's the market leader here? We'll just go with who everyone else is going with.
Yeah, we often say everyone wants to be innovative, but not first. Not all that helpful.
Yeah. No, the other phrase, everyone wants to be first in line to finance the third project.
Same.
It's the same kind of thing, right? So you have to find a way to navigate that.
Yes, this came up in the context of selling to hospitals, but I think maybe similar to selling to utilities.
Exactly the same dynamic. I'm sure a hospital doesn't, sign a PO in a week.
Right.
They've got a process.
Any other lessons learned? I'd love to learn more about, your lessons learned from building your own companies.
Well, in my case, partnership matters. I've spent over 10 years working with Idealab, either in official or unofficial capacity. And that was the best decision I made right at the beginning, is that, I could try to slog ahead, trying to do something on my own, but connecting with Bill and working at Idealab just opened up so many more possibilities so much quicker. You can't do things on your own, and you should know that, and therefore find the people who will best help you for the things, at least the things you don't do well. I think having the right partners who are helping you or support structure or something is really critical, because it's too much to try to do on your own.
What was it like working with Bill Gross?
Bill is a very enthusiastic guy. Bill's biggest strength, I think, is his ability to excite people about what could happen. I mean, what's crazy is there were times at Energy Cache, the storage company I'd started, I'm supposed to be the cheerleader. And I was like, I'm not sure, and I don't know how this works. And Bill's like, no, it's going to be great. We'll do this. We can totally do that. All right, let's get it done. And I thought, this is bizarre. I'm supposed to be the cheerleader selling to a stodgy board. So I think his biggest strength is seeing what's possible and being enthusiastic about getting there. And I think that all entrepreneurs should be like that. But there is a reason that Bill is, is a class on his own.
Can you also tell me a little bit more about, maybe it's Energy Cache that I think is a cousin with Energy Vault?
Well, so the whole thing started with Bill looking at energy storage on his own. So Bill was wanting to pursue something like this, and I literally walked in the door and said, here's what I want to do. And slide 4 of the pitch, he's like, I love it, let's start a company. 4 months in, I said, look, I don't think the economics make sense for this thermal approach, because honestly, the economics drives everything for energy storage businesses. And we pivoted to this notion of some gravity-based solution. And the thing that influences the economics most for gravity-based solutions is the cost of the weights. And so we decided to use gravel. And we ended up building something which looked like a ski lift lifting gravel up and down a hill. And that was Energy Cache. And then in 2012, we couldn't find follow-on investment. And so the company ended up shutting down, ended up selling the IP and the patents back to Idealab, and that was that. And then I joined Bill to be the CEO of a company called Heliogen. For the next, 3 or 4 years, Bill and I would still kick around ideas. Mostly Bill would, come running in and up to the whiteboard. He's like, why don't we do this? And hey, we should do this. And I got this great idea. And I would say, yeah, that sounds good. Well, what about this or what about that? And then in 2017, we shifted to a different direction. He found some people who, we were looking at concrete as the weight, and I had thought concrete was too expensive, but he found a team in Switzerland that had a lot of concrete expertise. And basically the pieces came together to start Energy Vault, which is not a ski lift, it's a tower. It doesn't use gravel, it uses concrete. And so Energy Vault was started in 2017 and brought on a new CEO, a CTO, and put a really great team together. And Energy Vault has had a lot of success. They raised over $100 million from SoftBank. And so, cousins is probably the best way to describe those two companies. But there's a lot of that at Idealab, where a failed idea resurfaces with a change a few years later.
Can you give me the basics of gravity storage? Like, I sort of understand it in the hydro plant example, and I kind of imagine it's the same with chairlifts.
Yeah, no. It's the most basic of high school physics, which is E equals mgh. The mass times the height that you lift it up by is the amount of energy it requires to lift it. So if you have all the blocks, say, sitting on the ground, and then you build up a tower, then the height difference, the h of the E equals mgh, will be the center of mass of the tower. You will have the weight of all the blocks as your m, and then g is just g, the gravitational constant. And so it functionally works by the electric motor of the crane is the point that connects to the grid. So you pull electricity from the grid to run the electric motor to lift all the blocks. And as you are going the opposite direction, as you take a block and lower it to the ground, the motor becomes a generator, and you put electricity back onto the grid. And it's a super complicated controls problem to make sure that you have nice continuous electricity coming on or off of the grid. But functionally, it's a battery, and it's a battery being run with really cheap materials.
It's fascinatingly simple, and I mean, like the fact that you were doing it with gravel and chairlifts, essentially. That's my summary of your first company. Sorry.
I built a ski lift in Irwindale in an abandoned mining pit.
Awesome. So other important things about Thinline that we haven't talked about, I assume you're investing when companies are like raising their first or second round of capital?
So typical check size for us is around $300,000 or $350,000. All of my companies, and I didn't expect this when I started the fund, but all 5 of them have been post-revenue seed stage deals. But I guess it shouldn't be surprising because my whole thesis is like, hey, I'm investing stuff that's really CapEx light. So these are all companies that didn't require enormous amounts of cash to get off the ground. And so with a few grants, with some angel money, they've been able to get that traction. So there's a lot of meetings for Thin Line Capital. There's officially 4 meetings, by the way. But one of them is this world that entrepreneurs find themselves in of walking a very thin line. And that's what I find myself like. I want to invest as late as I possibly can, but before it's too late and the company takes off and now I can't invest. And so that's typically the round before the Series A.
Yep, us too. I think it's the best risk reward. Before I wrap up and let you go, anything else you can say to just kick us in the pants and motivate us all?
The truth is, greed is a far more powerful motivator than fear. And I mean, in investing, it's literally fear and greed. And for a very, very long time, like decades, people have known about the consequences of global warming. And the only story to be sold was fear, because that was the consequence. If we don't change this, we will have these effects. If we don't change this, we will have these effects. But everyone wants to be on the winning team. And this is now the winning team. Renewables are cheaper than coal. Wind is like a de facto standard. Electric vehicles are going to be more prevalent than regular cars. Things that seemed impossible 5 years ago. How do you move the entire global economy? And you all of a sudden realize the global economy will move because people want to be on the winning side. And this is a massive, massive opportunity. Even like from 10 years ago when cleantech was this big hype thing, it was still a fear story. Whereas now the world is changing. There's trillions of dollars at stake. And it's amazing how fast things are actually changing. And people don't realize that. People don't realize how fast things are changing.
Do you have any lessons from other countries?
The US is this weird, super innovative leader and super conservative follower at the same time. And it's historically always been. And it's a function of having, 320 million people in the country. We showed up late for World War II. The rest of the world thinks World War II started in 1939. We don't have that date. And so the US is a huge laggard, unfortunately, in all of this. Europe is far ahead. I mean, individual countries in Europe are far ahead. Australia, in some ways. Australia is a country that their entire economy is like shipping out coal. So they've dragged their feet on this for a long time. But in other ways, they've implemented like way more aggressive policies than the US has. And so on the other hand, we were late for World War II, and we still managed to put on a good show. So I expect that we are late to the game here. So I think the US's risk is that we fall behind, and and there's certain things here like solar manufacturing is predominantly done in China, but I think there's an opportunity to catch up. So I think now there's going to be a huge push to catch up, and we're very good at doing that.
Aaron, talking to you always makes me just like want to stop everything and go help the planet. But I appreciate so much the work you're doing and the fact that you took some time out to come on the podcast today. I feel like I should let you get back to work.
Oh, it's a lot of fun. I mean, yeah, super glad to.